Okay, so like I said, the concept videos will now be optional. They're no longer required going forward. I guess before I kind of get into the chapter 4 material, any questions, general questions, we can get into specific questions or specific problems afterward, but any general questions about other stuff that I could try to answer, or maybe situations related to this last week that still need to be resolved.
So Brother Fox, I just, the videos are going to be optional, but we won't get extra credit for doing them or anything, right? So we won't be graded against them if we do or don't do them.
Correct.
Okay. Yeah. I just wanted to make sure I understood that.
Yeah, that's to the best of my knowledge. I just got an email saying they were optional, that the grade in the grade book that's 5% of your grade based on those concept videos will just be based on the ones from the first 8 chapters, and then the rest of them won't count for or against you.
So is that where the other 5% will be for the 95 total? Then that 5% from the 8 weeks will still count for the 5%.
Uh-huh. Other questions, or should we launch into chapter 4 in all of its glory and excitement? Nothing more fun than merchandising.
So one of the things I'm trying to understand on our grading, the 5% that we're going to be graded on for the videos. Now, our grade that shows up right now is a percentage like on our phones or whatever on that app. Is that going to change when all this is graded, or them are already graded, right?
Yes, those are already graded.
Okay.
So we're saying going forward, they won't. So the first 8 chapters worth of concept videos are graded and in the system. Although I'm also going to go back and look at the week 8, and if anybody kind of got, for lack of this probably isn't a BYU Idaho term, but I don't know a better term. If anybody got screwed because of all of this, I mean, seriously, the whole daylight savings thing like screwed up the system, and it was like people were, there was conflicting due dates. I did extend the due date so people could get it done, but I'm going to go through there and make sure nobody's, if I can see that someone made full effort, but there was issues with it, so there may be a slight increase to your grades if in that section, but there won't be any decrease.
So I have a question. Last week, we have the Excel activity, right?
Uh-huh. Mm-hmm.
And I did the Excel activity, and I wasn't able to find any guidance on how to do it. I spent a lot of time trying to figure out how to do it. Finally, I was able to find a video on YouTube from a teacher who was teaching how to do this work. So I followed the instructions. I was trying to understand why she was doing this and that and the formulas and stuff. And then I saw the short video that was on the homework as well. And I was trying to figure out, this and that and whatever. And so I did the activity and I submitted. But then I found out after answer one of the questions that one of the formulas that I did it was wrong. So logically I got it wrong, and then I figured it out. I said, oh, so that's the problem. So I went back to the Excel document that I did, and it was like for how do you say, when you put the sign, when you make a cell absolutely.
Uh-huh.
So I went, because the example that I saw, it explained it to me that if I put both price signal in the 2 cells, it will give me the answer. So that's what I did.
Uh-huh.
It did give me the answer. So that's the way that I did it in the first time.
Right.
But I submitted and it came back wrong. So I said, well, it has to be the other way. So I went back to my Excel and I did it in the other way. Just make one of the cell absolute.
Uh-huh.
And the answer was the same.
Yeah. So let me just let you know, there was all sorts of issues with that Excel problem, with the one that required you to upload an Excel
Yes,
file.
yes.
There was all kinds of issues with the way the system was grading it, and it was impacting especially students who are using like international versions of Excel that use like commas instead of, or use periods instead of commas anyway. So I went back through that, and anybody who completed the Excel spreadsheet, I went through and gave them full credit for that question. So you should have gotten full credit. If you attached an Excel file and I looked at it and I could see you did the work in it, you should have got full credit, even if it was marked wrong. I went through and manually updated that for everybody's score.
Yeah, because
So,
yesterday, when I submitted, it said that it's gonna be sent it back to you because it said
right,
required instructor.
right.
But
So I
then
updated the grade.
yesterday I got back an email saying that my homework was graded, and it came out was at 36.5 out of 40 points.
Right.
I thought it was because of that mistake that I did. And
R-
and the funny thing is, normally we have a second chance to upload, like trying to correct the error, you know what I mean?
Mhm.
And I couldn't. It didn't give me the chance to to trying to fix or anything. So
Right. Well, like I said, so if you miss points, it wasn't on the one that had the upload, because I marked those as full. I mean, I can double check yours to make sure that's the case, but I went through, and like I said, I had to go through each one, all like 86 or whatever that I have, and like manually update that score. So I'm pretty sure that if you missed that, that wasn't it, but I'm willing to double check yours
well,
and make sure.
it was from week 8, right?
Right. But probably we probably shouldn't spend a bunch of time in this
Yeah.
meeting with a whole bunch of people on focusing on your
Yes.
one thing, but I will definitely check yours.
Yeah, and I
Tell
will
me-
check too.
Yeah, tell me your name.
Denise Natarin.
Denise. Okay. Yeah, I can see your email, but I want to make sure I'll make sure that that's not what's causing that problem.
That's fine.
Okay. Okay. All right. So let's take a look at some info from chapter 4. I'll just do a little bit of, I mean, I guess it's like a little mini lecture here. I'll try to keep it short. All right. So this chapter is about merchandisers. That's businesses who sell stuff to people. Like, in other words, they're service-based businesses who are businesses that provide a service, do something for people, and then get paid for it. And then there's merchandisers, businesses that purchase goods from one person, usually a supplier, they're called, and then resell them to customers. So our chapter focuses on how merchandisers sort of record their transactions. And so the first thing you have to sort of understand when you're dealing with these is that there's 2 different systems that are still in use, in common use in the United States. Although I will say that the periodic system is phasing out. Fewer and fewer businesses are using it. But I grew up in a business that used a periodic system, so I'm very familiar with it. But so the difference is a perpetual system updates accounting records each time a purchase is made and each time a sale is made. The use of modern computer accounting systems make this pretty easy. So you think of if you go to Walmart and they scan an item across, or you scan it yourself now because it's self-checkout, that's automatically updating the inventory and recording that as a sale each time you scan an item across the barcode scanner. And in a periodic system, what you do is you record all the purchases and the sales throughout the year, and then at the end of the year, you actually do a mathematical calculation to figure out how much inventory you sold during the year and what your cost of goods sold was. So when I grew up in my mom's store, we would actually had this little, it was like a spiral bound notebook, and for every single item we had, we would keep track of how many. So for like cans of peas, I would open the notebook, and I would, at the beginning of the year, we had written how many were there, or it was actually the end of the previous year. And then throughout the year, as we purchased, we would add, 12 cans each time we purchased a case. And then at the end of the year, it was my job to take that notebook and go count them. This many cans of peas are here, and write it down. This many cans of corn are here. And we would use that, what we had at the beginning, plus everything we purchased, which would tell us our goods available for sale, and then subtract the number we had left over at the end of the year, and that would tell us how many we sold during the year. So the periodic system updates the records once at the end of the year or at the end of a period. Some people do it quarterly or even monthly. So that's the difference between the two types of systems that we use. All right, so if you've started the homework, you've already seen this terminology. This is how we write purchase discounts. And so what I have up on the screen is a purchase discount terms. This is called, it would be called 210 net 30, which means that the purchaser will get a 2% discount if they pay within 10 days, or net, meaning the whole amount will be due within 30 days. So many businesses, especially wholesale businesses where a supplier is selling to a retailer, that's a business who sells to end customers. Many of those businesses will offer these types of terms. The most common are 210 net 30. Sometimes you'll see a 110 net 30 or a 215 net 30, which means a 2% discount if they pay within 15 days, or the net amount is due within 30. And some even will do like a net 60, give people 2 months to pay. But just, you need to be able to recognize this is the terminology, or this is the way purchase terms are often written out. All right, so the other thing we need to know when we're making these journal entries that actually is harder in an accounting class than it is in real life is, am I the purchaser or am I the seller? In real life, it's super obvious if you're the purchaser or the seller. You know that, right? You know, oh, my business is buying these goods from the supplier. But when you have a problem like in a assignment set, you don't know always what perspective you're acting from, and so you have to. So you need to know, hey, am I the purchaser of these goods or am I the seller of these goods? So these first entries we're going to look at is how we would make these entries if we're the purchaser. This book uses something called the gross method. All the gross method means is we record our sales or our purchases at the full purchase price, regardless of whether or not we're going to take the discount. Later, when we actually take the discount, in other words, we pay early so we get that discount, we'll record the discount at that time. Other businesses use something called the net method, where they assume that they're taking the discount. So they record the purchase initially with the discounted price and only make an adjustment if later on they don't take the discount. Really, it matters. The way you make that decision in real life is, do I typically take the discount? If I do, then I might record things at the net and only make adjustments if I don't take the discount. Or do I typically not take the discount? Then I report things at the gross and only make a change if I did. So here's an example. And again, don't be afraid to jump in if you have a question and ask me, rather than wait till the end and just be confused.
I have a question.
Yeah.
Are there keywords that kind of would help us recognize that this is a purchaser, like the person buying it to sell, or if it's the person buying?
Yeah, no, that's a good question. So, I mean, honestly, it just says that they purchased this. There is actually one problem that I worked out in the quiz access where it was really confusing, because it was like telling you all this information about the supplier, but then asking you to do the recording from the purchaser standpoint. And it threw me off at first. So typically these are going to say, you know, that Zmart purchased these things, and so record the journal entry. It would be clearer if it said record the journal entry for Zmart. So, I mean, really that's the key term, that they purchased it as opposed to sold it. And then as far as it being the gross method or the net method, the problem would have to tell you, because there's no way you could know that just from the way they state it here. So using the gross method means whenever we make a purchase, we're just going to record the transaction at the full price. So we're going to debit merchandise inventory. That's an asset account. Okay, that's something we own. and then we're going to credit accounts payable, money that we owe to the supplier. So one thing to remember, and as we go through discounts and things like that, people sometimes think of inventory as representing the stuff sitting on the shelf ready to be sold, which it does, but what it really represents is the cost of the stuff sitting on the shelf. So if you take a discount, you're not going to somehow try to put it to a discounts account. You're just going to credit merchandise inventory, because you'll still have the same stuff sitting there, but it will have cost you less. Okay, so let's look at some of those. So here's a payment with a discount. So on November 12th, Zmart pays the amount due from the purchase on November 2nd. So they're taking that within the 10 days, meaning they're going to get the 2% discount. So whenever we purchase something and then pay within the discount period, we still have to debit the full account payable. Why? Because we no longer owe that money to the supplier, but we're only going to credit cash the amount we actually have to pay them, which is the amount we owe them less a discount. The difference between the two, between what we owed and what we actually pay, is the discount. And so to find that, we would say it was $500 times 98%. It was a 2% discount. So if we paid full price, we'd be paying 100% of the purchase price. But since we took a 2% discount, we'll be paying 98% of the purchase price. That tells us how much cash we pay, and the difference is the discount. We record the discount as a credit to the merchandise inventory account, because remember, merchandise inventory stands for the amount of money we paid for our inventory. And since we initially recorded it as $500, we've now got to record that discount here as a credit of $10. So now the balance of that account will be $490. So that's the process by which we would enter that entry. If we were to pay after the discount period, so we didn't get the 2% discount, then we would just debit accounts payable the full 500 and credit cash the full 500, because that's what we paid. Sometimes when we purchase things, some of them are defective and don't work right. So usually you call your supplier and say, hey, you sent me a defective product, at which point sometimes they'll tell you, go ahead and return those products to us. That would be called a return. And other times they'll tell you, hey, we'll just give you an allowance. Like, go ahead and keep it. It won't do us any good to get the defective item back. So they'll just issue you what's called an allowance. So in this case, it says Zmart, the buyer, gets a $30 allowance from Trex, who was the supplier. So when that happens, all we do is we debit accounts payable, meaning we don't now owe them the full amount. We owe them $30 less. And again, we credit merchandise inventory because that reduces the cost of our merchandise inventory. A return's a little bit different. So here, Zmart purchases $250 of merchandise on June 1st with terms of 210 net 60. On June 3rd, they return $50 of goods, and then they pay the invoice on June 11th. So I'll go through each of these journal entries. When we make the purchase, we'll debit merchandise inventory, which is an increase because that's an asset account, and we'll credit accounts payable, which is also an increase because that's a liability account. Then on June 3rd, we return $50 worth. So we're going to debit our accounts payable, meaning we owe them $50 less. And we're going to credit merchandise inventory, meaning the cost of our inventory is $50 less. Then on June 11th, when we go to make the payment, a common error people make is they'll apply the discount to the amount of the original purchase. But you can actually only apply the discount to the amount you still owe as of the date of payment. So since we owed $250, then we credited that account $50. At the point of purchase, we only owed $200. So we're going to debit accounts payable to show that we're paying off the full amount. We'll figure out how much cash we have to pay by taking the accounts payable times the times 98%, since the 2% discount. So we have to pay $196. And then our merchandise inventory, this will go down by the amount of the discount, which was 2% of the full 200. So just remember the amount of cash you pay plus the amount you're crediting to inventory has to add up to the amount you're debiting accounts payable every time you pay for a purchase. That's the process. All right. So now there's this whole issue of when you buy something from a supplier, or if you sell something to a customer, who has to pay for the transportation? And also, who actually owns the goods while they're in transit? So if there was like a, let's say the transit vehicle got in an accident and all the goods were destroyed, whose insurance company would be paying for it, the buyer or the seller? That really matters to insurance companies. They want to know that, right? So there's two types of shipping terms, and they're called FOB shipping point and FOB destination. FOB means freight on board. That's what the term means, freight on board. So we can either ship things freight on board shipping point or freight on board destination. What that means is once the freight is on board or loaded onto the vehicle, whether it's a truck or an aircraft or whatever it is that's transporting it, or a boat or a train, okay? So FOB shipping point means ownership transfers once we load it on the truck. So if I'm the seller, I put the goods on the truck, they no longer belong to me, they now belong to the buyer. If I'm the buyer, I know that as soon as the seller loads them on the truck, they belong to me. And the question of who pays for transportation is whoever owns it, okay? So if we do FOB shipping point, meaning ownership changes hands when we load it on the vehicle, then the buyer, since they own it while it's in transit, they're going to be responsible for the shipping costs. We can also do what's called FOB destination, which means the property or the goods remain the property of the seller the whole time they're in transit, and they don't become the buyers until they reach the destination. In that case, since the seller owns it the whole time, the seller is going to be responsible for the shipping costs. So recognize that if you're a buyer, you tend to record any merchandise or any transportation costs as part of your cost of purchasing the inventory. So you'll record transportation costs by debiting merchandise inventory, increasing the cost of that inventory, and crediting cash if you paid in cash for that, or accounts payable if you're going to pay for it later. A seller tends to track the cost of shipping or transportation as a specific expense. And so they typically will debit delivery expense and credit cash. So there's a summary of how transportation costs and the shipping terms sort of work. Again, you'll see problems in the homework if you haven't already that will kind of say, this was sold FOB shipping point, who's responsible for the cost, whose property is it while it's in transit. Okay, so there's a new special expense that we haven't yet seen up to this chapter called cost of goods sold. So cost of goods sold is like literally just the cost of the goods that you sell. Like its name is really descriptive. And so if you're Walmart and you buy a can of cream style corn for 35 cents and then you sell it for 85 cents, then when you sell it, you would say your cost of goods sold was the 35 cents you paid for that corn. And so that's all cost of goods sold means, is the cost of the items you're selling. And we can calculate something called gross profit, which is our profit before all of our fixed expenses, just by taking our net sales, which is our sales minus any discounts, returns, or allowances, minus our cost of goods sold, gives us our gross profit. All right, so from the perspective of the seller, the first journal entries we went through were from the perspective of the purchaser, and these are from the perspective of the seller. So Zmart sells, so first of all, I want you to recognize that each time we make a sale, we have to do two different journal entries. One to record the revenue, the money we're earning from selling something. And then the other to record the cost, or the, how much the units of merchandise that we're selling cost us. So here's an example. Zmart sells $1,000 of merchandise on credit. Merchandise has a cost basis to Zmart of $300. So the first thing we're going to do, the first entry we'll make is to record the sales revenue. So we're going to record accounts receivable, debit 1,000, and sales, which is a revenue account, will credit 1,000. If the customer had paid us cash, the only thing different about this entry would be a debit to cash and a credit to sales. Okay, so that's the first side. They call it the revenue side of the journal entry. And then the second one is to record our cost. So if this merchandise costs us $300, we would debit our cost of goods sold, which is an expense, 300, and we would credit merchandise inventory, which is an asset, 300. So if you think about these two journal entries, what you see is we have an asset going up by 1,000, money owed to us, and an asset going down by 300, the inventory we're selling. So if we wanted to calculate the gross profit for this transaction, we would just take the revenue brought in minus the expense and say we made $700 gross profit on that transaction. Sometimes we make sales with discounts, again, meaning we give our buyer a chance to pay early. And again, we're doing these with the gross method. So when we make the sale, we'll go ahead and record everything at the full price. So this is the same journal entry that I just showed. So we first record our revenue and the amount owed to us, accounts receivable, debit 1,000, sales, credit 1,000. And then our expenses, the cost of goods sold of 300, and the asset merchandise inventory going down or being credited by 300. So if the buyer pays within the discount period, we're going to show our cash increasing by the amount that they actually pay us, which would be the $1,000 minus the 2% discount. Our accounts receivable will have to go down by the full $1,000 so that we can show the customer no longer owes us any money. And so the difference between the two will be the discount. And we actually use a special account called sales discounts. If you think about it, if you care to think about it, sales discounts is a contra revenue account, meaning it gets paired together with our sales revenue account, but it reduces the overall. Because in essence, we made $1,000 worth of sales, but less $20 in discounts. We actually only made $980 in net sales from that transaction. If the buyer were to pay after the discount period, then it would just be a debit to cash. Our cash would go up 1,000 and our accounts receivable would go down 1,000. So sometimes in these problems, you have to pay attention to the date they're paying on, because they won't tell you, oh, they're paying within the discount period. They're going to leave it to you to recognize, oh, that sale had 10 days worth of terms and they paid 9 days later. So I have to put the discount in there, or they paid 12 days later. So I'm not going to put the discount in there. That's, if you haven't noticed, accounting is not about hard math. It's about paying attention to these little details in the words, right, that sometimes catch you.
Like the month.
Yeah.
The days are 2 days apart, but it's a month apart, actually.
Yeah, it is frustrating. And I will say that is, as much as the book authors are like trying to get you, that is like legitimate real life accounting. Like it really is. What's interesting is how like I can do accounting, but when it comes to like having attention to detail and other things, like noticing a change my wife made around the house or something, I'm completely obtuse. So I'm not sure why accountants are almost known for being obtuse about like big ticket items, but they can catch those numbers. I don't know. Engineers, the same thing. My son-in-law is an engineer, and I get to watch my daughter be frustrated with him. It's pretty cool. All right, that's one of the joys of when your children get married, is you can just be like, oh, look, it's hard for them too. All right, so sometimes we have sales with returns and allowances. So here the customer returns merchandise which sold for $15 and cost $9. So again, we're gonna record it to an account called sales returns and allowances, and show the cash refund that we're giving to the customer. Other times we have returns that are not defective. And so we will just put them back into inventory in essence. Actually, this is all one transaction. So let me restate it because I think I may have just been confusing. Just like when we make a sale, we have to worry about the cost and the revenue. So the same idea here. If we sold these for $15, then we've got to show our cash going, the return, we'll have to show our cash going down by 15 and our returns and allowances going up by 15. And we'll have to show that our inventory is going up again by 9 because we're taking that return and putting it back into inventory so we can sell it to someone else. And our cost of goods sold going down by 9 because we're kind of undoing that sale. So we have to do both sides of it when we do a return. Now, if the return goods are defective, we'll have to account for those in a different way because we can't take defective goods and put them back into our merchandise inventory unless we're Walmart. They seem to like to do that sometimes. Maybe never happened to you guys, but so here we have assume that $40 of the merchandise Zmart sold is defective, but the buyer decides to keep it because Zmart offers a 10% price reduction. So then we do what's called an allowance, and we're going to debit sales returns and allowances and credit cash. So we're just going to pay the customer to keep those goods. All right. So something new that we haven't seen previously, although related to what we have, is what's called a multi-step income statement or a multiple step income statement. All this is an income statement like we've seen before, but with a lot more detail. Okay. So instead of just sales and expenses and net income, it'll have sales minus sales discounts and sales returns and allowance will give us net sales, minus cost of goods sold will give us gross profit. And then it breaks down the expenses typically into selling expenses, so the cost of selling stuff, and general and administrative expenses. And so then we'll have our gross profit minus our selling expenses, minus our general expenses, will give us our income from operations. And then it'll have other expenses like interest, revenue, other interests and expenses, gains from selling a building. In other words, revenues we make from things that we don't typically do. And then things like interest expense or unusual expenses as well. And then we'll have our net income down at the bottom. So again, it's just an income statement with a whole bunch more detail. Okay. Sometimes you'll also see a single step income statement where it will still have cost of goods sold, but it will just lump it in down here with the expenses. Like I said, this sort of single step is sort of what we've been doing. Just so far in this course, it's been like service-based businesses. And so the big difference is we're going to have this addition of this new expense, cost of goods sold, and we'll see net sales instead of just sales, which is our sales minus any returns and allowances. The only real difference on a balance sheet for a merchandiser as opposed to a balance sheet for a service-based business is the addition of the asset merchandise inventory, and also the addition of separating out assets into what are called current assets, which are assets that are short-term in nature, meaning they're either cash or there's something that we're going to convert to cash or use up in the next year. That includes things like accounts receivable. We expect to collect that from our customers. Merchandise inventory, we expect to sell that to customers. Office supplies and other supplies that we expect to use up in the next year. And then you'll see long-term assets like property, plant, and equipment, land, buildings, other equipment that we expect to use over the longer term. And that's really all the big ticket items from this chapter. And so at this point, I would maybe turn the time over to you guys and see if there's any specific homework questions you'd like me to go over or to try to walk through.
I had a question on number 1 for the financial statement analysis.
Okay.
I just had trouble finding the parts that I needed on when you click on apples, all those pages.
Okay, give me a second and I can pull it up. Maybe.
If you could just kind of like point me in the right direction.
Sure. Yeah, I just need to pull it up so I can see it. So let's see. I'm going to go to McGraw-Hill Connect. Wait for it to load. Go to my Connect section. Wait for that to load. I'm getting closer. And then chapter 4, financial statement analysis, right? Let's see. I'm getting close. All right, let me share my screen. All right, so here we are looking at this first one, refer to Apple's financial statements in Appendix A. Assume the amounts reported for investors and costs of sales reflect. So is it this first one you said?
Yes, it is.
Okay, are you seeing my screen?
Yep.
Okay, so let me go to the appendix. And then we're gonna look at Apple's. So in order to find our cost of goods purchased, we're gonna have to do, so right here, I'll show, I don't know if you can see this very well, or if I should make it a little bigger. That's not gonna let me, oh, there it goes. So what we're gonna have to do is start with our inventory for 2017. And so if we come in here and we look at our current assets and our inventory, so our 2017 inventory is 4855. Remember, this is in millions, so we would actually add 6 zeros to it, but it's easier to just work in these numbers. So we start with that. And then it's plus our cost of goods purchased, less our inventory at the end of the period is going to give us our cost of goods sold. So what we're having to do is sort of solve for this variable that's in the middle. So our inventory at the end of the period, we can find right here, 3956. And then our cost of goods sold, we can find on the income statement. Or they call it a statement of operations, which is cost of sales for 2017, I believe is what we're looking at here, right? 2017. Cost of goods sold. Okay, so it's for 2000, we're looking at 2018, sorry, for 2018. So we take 163,756. So once we find those three, right, what our inventory was at the beginning, our inventory at the end, and what our cost of goods sold were, then we can sort of recalculate this and solve for our cost of goods purchased.
Okay.
Does that help?
Yep, that does. Thank
Okay.
you.
It's easy when you have the answer key right on your thing, right? But I wanted to pull it up because I think it gives a nice like list out of how it works. Other specific problems, I've got about 10, 15 more minutes before I have to get to my next class, but so we
Yeah.
certainly have time for another one.
I have a question, and that's
Okay.
the problem in the required 2. It's asking us for the current radio and the acid test radio. And I do have the formula for the current radio. It's current assets divided by current liabilities.
Right.
Right. So if I'm not wrong, according to the problems that we did last week, we take what I did is I took the cash and equivalents for 2018 from the appendix, and which is what let me just go so if you go to the appendix and you go to the cash and equivalents for 2018, it's 25,913, right?
Correct.
So you're supposed to divide that amount with current liabilities. And if you go to current liabilities is right there, it's 116,866, right?
correct?
Okay.
Oh. So, but when you're doing the current ratio, you need to do the total current assets, not just the cash and cash equivalents. So it would be this line here, total current assets.
Oh, so then if we took the total current assets for the first question, which is oh, where is it? It's right here. So I'm at number 2. If we do if we take those for the current ratio for the cash and equivalents, then what do we take with marketable securities? We just go to the another amount. We have another.
Yeah, it's all listed there. So yeah, so the way they have this set up, you can't just take the total. So you have to list, these are all the current assets. So we have cash and cash equivalents, marketable securities, accounts receivable, inventories, vendor receivables, and other current assets. So all of those are going to be listed out here. And then the total of them is your total current assets. Divide that by your total current liabilities gives you your current ratio.
Oh, okay.
But your acid test ratio takes your quick assets. So
Right.
that's the difference is current assets and quick assets.
Right. So when you're doing the acid test ratio, in essence, you're going to exclude your inventories, your vendor receivables, and other current assets. It's just going to be your cash and cash equivalents, your marketable securities. And I don't even like them including, honestly, for acid tests, and some don't, accounts receivable, because you don't know how much of that you're going to be able to convert to cash very quickly. It's hard to always get your customers to pay. But for this book, your acid test ratio is going to be your cash and cash equivalents, your marketable securities, and your accounts receivable, which it calls your quick ratio. I mean, your quick assets, and divide those by your total current liabilities.
Got it. So practically what it's asking us to do is just to take the information from the appendix, put it down in the table, and just make the division and just get the result, right?
Yeah, I think what they're trying to do is help you be more comfortable looking at these financial statements from a big business and just copy that information down here and then calculate your ratios.
Got it. Yeah. Yeah, it was kind of confusing when I went to the homework, say, okay, what I should do now, because I don't have an idea. Okay. Okay, perfect. Thank you. I think now I have an idea.
All right. Good. We got 10 more minutes or so. Anybody else have a one they want to look at, or it's okay if we end 10 minutes early too, by the way, we don't have
I
to.
do.
Okay, Lindsay.
On week 9, quiz access, chapter 4, question number 9. I'm wondering if the total cost of merchandise purchases is the same as net purchases.
Let me look at it. But so the total cost of merchandise purchases is the same as net purchases. I would say probably yes.
I
Sometimes-
I don't remember seeing it that way in the work, in the study stuff. So
Yeah, let's take a look at it and be sure. Sometimes the hard thing about these, Connect or any of these systems is it's like, I get what you want from me, I get the numbers, but I don't get what you want from me, McGraw-Hill, right? So let's just take a look at how they did it. So we had all these
empty
total cost.
boxes that we had to fill, we had to find for.
Right. And let's see. So it's what it wants us to consider here is, let's see, like this, let's see. So I'm trying to like convert this to like real life. In real life, if we were to say, hey, what's your cost of purchases? It would be the cost of your purchases minus any purchase returns and allowances. So yeah, it'd be your net purchases.
Okay, thank you.
I just had to talk through it, huh? All right.
Hey, Brother
Okay.
Fox, I have a
Yeah.
question.
Sure.
So on week 9, we have to do the final version of the ethics assignment. And I know you graded the first one, and I don't know that you did, but I felt like the comments that you put on there were just like general for everyone.
Yeah,
Like
that's
it was
probably
not
true.
personal to my paper. Like
Yeah, so let me, at risk of offending the course designers, I think it's kind of a bogus assignment. It's kind of a silly assignment. And so honestly, if you submit that with a reasonable amount of of effort, you're going to get full points for it. I'm not grading it like it's an English paper. I did look through it, and so some people got some very specific comments, like, okay, this would not pass as a reasonable memo in any sort of normal professional place. But most people's was fine. Most people's was like something I would see in business. As far as the explanation of what the problem was, I put that general to everybody just because I wasn't sure everybody understood it, but most people did. So I just wanted to explain so I don't know if that makes sense. So
no, it does. I've never seen a memo like that, so I don't even know what a real one looks like to
So-
know if mine is like right. I watched your little video you did
Mhm.
about it, but I just wanted to do it correctly. And
so recognize that, like, this is why I think it's a bogus assignment, is like nobody writes memos like that anymore. Like, you just send an email, right? You just say like, hey, Tom, I noticed there was an error in your thing, or and so I feel like in an effort to make it feel more formal or something, they had us do this memo, which is honestly more formal than most business communications are in the modern era. And so it would be very normal in any accounting firm or any business I've ever worked in to simply shoot an email to the boss saying, hey, I think we recorded these incorrectly. Here's what I would recommend as the change. And that would be sufficient. And so that's kind of how I'm grading this. Like, if you did that, so there were some variations. There were a handful that were completely off base, and those got more specific guidance, but everybody else got a pretty general guidance. And if you got that general guidance, it means double check, make sure that your explanation of what was wrong kind of fits what I had in mind, and submit it, and you're going to get full credit.
okay, thank you.
Does that help?
Yes, thank you.
Okay. Yeah, I shouldn't say it's a bogus. That sounds like I hate their assignment. It just I'm not sure of the deep value of it. Especially to call it an ethics assignment, I'm not sure how it fits.
Oh, Brother Fox, I have a question. Do you think that there's a way how you can help us? Sometimes it's asking us to do, like, for me, the first time that I found out that I have to do the cost of good purchases, I wasn't able to find the formula. And if you go to Google, sometimes it gives you a bunch of information that I don't know, it confuses you even more. There is a way, I know that you do videos and you submit information to us to get ready for exams and whatever. There's a way how you can help us to maybe have kind of formula sheet for us, and just finding somewhere it's more, it's gonna make more sense with the homework that we're doing, instead of going to Google and trying to figure it out there.
Yeah, I believe that, like, the formula, for example, of cost of goods purchased is available in the chapter. And so
Because I wasn't able to find it, and I know that someone posed the question on the Tutoring Help. That teacher, I don't know who was the teacher. He submit the answer, but he did. He submit the answer for good cost of goods sold. He put that formula, and then from that formula he took the formula for cost of good purchases.
yeah, and I would say that's probably true of all that's in the book. It probably gives you, so these are these ones where the textbook author some said they have all these summaries of the different entries, but I'm trying to remember where I saw it. But so what they're trying to get the student to do is if you know an existing formula and now it's asking for a different variable in the formula, they want you to sort of recast the formula. And when we ask them, why do you do that instead of just giving them the formula, the response is because we're attempting to get the student to think more deeply about that. And so, yes, I could try to put together something on that, but I probably can't foresee every
Yeah, I know.
way that they would try to like leave that. Again, what they're trying to get you to do is say, hey, you already know the relationship between these items. Can you solve for a different one within the group? So I would be happy to. I was looking to see, a lot of times the chapter at the end of it will have like a summary of formulas, but and I know that I saw it somewhere, but I can't find it off the top of my head here. So like I said, I would be happy to do that, but I don't know that I have a definitive list, especially for something like that is not like, it's not something
Got it.
often that people are saying, hey, calculate the cost of goods purchased, because usually the cost of your goods purchased, it's the cost of goods sold that you're trying to calculate.
Okay.
I know that wasn't a very satisfying answer.
I don't know. My head is continue spinning since last week. It's been a nightmare for me, to be honest. I've been trying to put all that information in my mind, and I'm like, okay, just take a deep breath and trying to do your best. But it's been tough, I guess. But it's
Right.
going just fine, I guess.
Yeah, and part of the problem with last week is I just think there was really an overload of material.
Yeah. A lot of
and-
information.
Right.
I think what would have helped last week is I know for me, if I would have taken the test in the middle of the week before I started studying chapter 4, it would have helped, because after studying chapter 4, I was so confused.
Yeah.
It didn't help me out.
Yeah. Yeah. I mean, maybe that's a good piece of feedback I can give to course design. I'm sure if we do that, though, there'll be someone that says, I need a couple extra days to do the exam, right? So, but
Yeah, and they had it laid out to take it. It was assigned midweek, but it wasn't due till the end.
right.
So, it's my own fault for not doing it beforehand, and then life gets in the way. But
Yeah, but it was a ton of material to cover. And that's, I'll tell you, I teach this for another college, the same course, and this is one of those courses that is the same, like you can go to a bunch of different colleges and universities, and the course is almost identical, and it's just a lot of information to get to, and we teach it in a 16-week term here at EAC, where I teach full-time, and they do it here like in a 14-week term. So I think they're trying to cram some of these weeks a little bit too full.
Yeah.
I've seen colleges where they do it in an 8-week term, and it's a lot. It's crazy.
Yeah, sometimes it's just confusing. Like for people like me, that English is their first language. Sometimes they put the question out there and just confuse you. It's total different than the way that you learn it from the book.
Right. No, and yeah,
and then you're just trying to figure out what they want from you. Like sometimes for people who doesn't speak English, but it's not our first language. Nightmare.
No, I feel for you, because it's all specialized terminology too, and I've always said, my Chinese is okay, but if I had to go to China and take accounting in Chinese, it would be the number of hours extra I'd be putting in just looking up terms and just trying to understand, and then realizing a lot of the questions hinged on my understanding of one or two words. I feel for you. I'm so sorry that you have to. I wish we offered this class in Spanish.
Yeah, that will be great.
A lot of students who here at EAC, I always have a handful of students from the Mexican colonies that come up here, and so usually they'll work together in a work group and help each other out with the Spanish part of it. And that's, maybe you need to create like a Spanish speaking student study group
Yeah, that would be
and,
a great idea. So we can understand it in our own, but even though when you have help in your own language, when you go to the exams,
right.
it doesn't work because it's different terminology and stuff. So it doesn't work either way.
Yeah,
You kind
that's
of
true.
have to understand in English.
Yeah.
And then, but anyways,
Yeah.
So
All right.
much.
Well, I'm out of time. I've got to get to another class. I really appreciate everybody coming, and like I said, I know last week was tough. I think it's going to be a little lighter going forward. And I guess that's all I have. Can we maybe have someone offer a closing prayer?
I can give it.
Okay, terrific.
Our dear Father in heaven, we're grateful that we could meet here tonight and go over this information. Please bless us that we'll be able to take it and learn from it and be able to get the concepts that we need to. We're very grateful for thee, and we're grateful for thy gospel in our lives. And we're grateful for the time and effort that Brother Fox is putting towards this class. And this is saying, Jesus Christ, amen.
Amen. Thank you very much. And I will say to Jody, if you feel like you want more specific instruction on that memo, I'd be more than happy to talk to you one-on-one. I maybe was, I don't know, maybe underemphasized it in my comments or I just felt like what most people turned in would be sufficient and would match what I typically see day to day in real life. So I went from there. So we'd be more than happy though, one-on-one if you wanted more.
I think I'm
All right.
good. Thank you, Brother Fox.
Okay, great. All right. Have a great night, everybody. Thanks for coming.
Thank you.
thank you.